Hello and welcome to another T. Cassiola Company or Hamilton Financials tutorial within Hamilton Financials. We thank you for reaching over 30,000 page views on the day, which is what probably 99% of sites, more than 99% of sites get in a month. Today we will be looking at Amcor Technology. This is a stock that I've actually sold, but it is quite a good stock. I'm going to look at the financials and do a little bit of graph work, but just to give you an idea of looking at the financials of a company and how they relate to the intrinsic value or the estimated value of a company. Now, the stated value is what you're given, but the intrinsic value is what is really the stock's worth. So let's look at the 5-day. See, it gives you a 1 day, a 5 day, a 3 month, a 6 month, a 1 year, and a 3 year, and a 5 year. Now, this is MarketWatch.com. This is probably my favorite trading platform. So let's look at the 5 day. Now, I actually have sold this stock. You can see that it is downtrending, and it looks to be going lower. Let's look at the 3 month, though. See, it capped out here, but then if you look at the 6 month, you can see that I bought it around November, December, and I sold it probably mid-February. But let's look at the financials of this company, because you can't always find the quarterly financials, but you can find the yearly financials. And the financials tell you a lot about a company. So let's look at the financials. So you go to Financials tab. You click on Financials on MarketWatch.com. MarketWatch gives great financials. Now, we're going to be going over a balance sheet within this tutorial. So, this is the income statement. It's trading at $4.90. We want to look at the balance sheet. Now, what does the balance sheet tell us? That's what we want to know. Let's start out here. Let's zoom out a little bit. Okay, so let's look at our assets here. Let's zoom in again so I can see this better. Okay, so your assets. Now, when you're looking at the assets of a company, you always gauge the assets in comparison to the market aggregate numbers, or the market value at the specific time period. So, from 2007 to 2008, their total assets only went down about 126.51 million dollars. Now, the Dow went down from about 14,000 points to about 6,700 points within that time frame. You can clearly see that their total assets have outperformed the Dow's value of them. Now, clearly you can see from 2008 to 2009 to 2010, they have gone up, but total assets have gone down in 2011. Total assets, according to Benjamin Graham, who I would consider my mentor, is the greatest intrinsic value estimator of a company. If you truly think about what total assets mean, think about the concept of patents. Think about the concept of property, plant, and equipment as you were taught in your economics classes, or maybe you have not taken economics. But a company can do much on their balance sheet that will always show on their total assets. So, from 2010 to 2011, their total assets went down, but where did the Dow go? The Dow went up. We're just using the Dow as a aggregate summation estimator. We're not using the Dow as a, well, I guess you can say we're just using the Dow as a market level to judge upon. So you can see there's cash and short-term investments. From 2007 to 2008, the cash and short-term investments actually went up for AMKR. Now, this is actually a good thing, because from 2007 to 2008, you can see that the market clearly dropped into recession, which is a recession is defined as a drop in the aggregate price of aggregate indexes or aggregate stock accommodations of 30% or more. And you can see that their cash and short-term investments went up from 2007 2008, but right now in 2011 they're only at $237 million. So they haven't really gained too much revenue. And from 2008 to 2009, they actually dropped. There's no figures for 2007 2008, so we'll just leave that alone. Their accounts receivable went down significantly. And you can see here that this was a good short-term investment. Once the 2011 numbers came out, you can see that from 2010 to 2011, their total accounts receivable dropped almost $100 million, about $85 million. That shows you that they're not taking in the income that they would have had. That would have shown up on their PE ratio, or their price to earnings ratio, within their accounts receivable. Their PE ratio would have risen, and AMKR would have most probably dropped their stated value, which is the actual value of a company, or the value that you see, from 2010 to 2011. But their graph showed when I invested in them in, I believe, early January of 2012, that they had potential for growth. Now we'll look at their accounts receivable. That also dropped. Now these are total accounts receivable. We'll skip that. Now let's look at their inventories. Their inventories have actually grown significantly, especially from 2009 to 2010. That shows that they're taking in, or holding, or withholding even, assets. Inventories are a summation or type, or per se, to say a type of asset. And from 2009 to 2010, they increased their inventory significantly. You can see their work in progress went up significantly, the raw materials went up significantly, and their other current assets also went up, not as significantly, but maybe to the point where you would say, maybe I'll invest in this company without seeing the 2011 numbers. So, we scroll down here and we say, okay, well, I might have invested in this company if I had seen the 2010 numbers, but once the 2011 numbers were released, maybe I don't want to. Why would the total assets of a company go down when the aggregate capitalization of the Dow and Nasdaq indexes has gone up? That shows that they are not doing a quality job or a performance job of allocating their assets. Now, net property, plant, and equipment. Now, when I look at net property, plant, and equipment, I say to myself, listen, this could be a huge factor within the intrinsic value of a company. A company's total assets could increase due to the fact of acquisition of property, plant, and equipment. So, their property, plant, and equipment actually went up from 2010 to 2011. And this showed that they were doing things managerially which summated that the stock may in fact be a buy. This might not be the best example, but it is quite a good example. As you can see, net property, plant, and equipment went up almost every single year with the exception of 2008 to 2009. This includes buildings, land improvements, computer software and equipment, and so on. Computer and software and equipment, when I look at that, that is not necessarily an asset. That is a liquid asset that has a short lifespan. The trend or the graph of computer software and equipment would be very small because of the increases in the availability of newer and better products within computer software and equipment. So their depreciation The depreciation went up as well, and we'll skip that, but let's look at total investments. They were actually not as smart as you might have thought. They went from $4.74 million in total investments, which is actually a small amount of money considering they have $1.88 billion in 2007 in accumulated depreciation. But their total investments went from $4.74 million to $1.7 million in 2008. Now, when you look at a company, you might say, well, the market was down. That would be a good investment to short or to sell off your total investments. But, in fact, the statement that they say when saying buy low, sell high, you will see that you will see a greater return in the lower markets when markets are trading aggregately lower than you will see when the markets are trading aggregately higher. Now in 2009 they stepped it up. They moved their total investments up about let's say 2,000% approximately. Now that would be a good investment. They realized the market was stable and they were a good investment. Clearly they continuously strained their investments approximately, but they didn't have too great of investments. Now, other long-term investments are quite irrelevant in the similar numbers. Let's look at intangible assets. Intangible assets, things like goodwill and other intangibles, these things are more intrinsic than stated. So, when looking at a stock, don't necessarily look at intangible assets. When looking at a company like the Melinda and Bill Gates Foundation, intangible assets would be, in fact, a great approximation to what they are worth, but not necessarily within the stated value of their company. So their other assets went up, tangible assets, and now we have total assets. Their total assets dropped from $3.19 billion to $2.38 billion from 2007 to 2008. In 2009, they rose approximately let's say 1.5%, and they rose quite laterally or vertically from 2009 to 2010. And in 2011, they also grew, but less in aggregate figures or in summated figures. So what would you say is the greatest detriment to a company's, not detriment, but greatest asset to a company's holding or index or equity value? That would be total assets, and that is one of the key principles behind Benjamin Graham's writings. And as you can see, although they lost a significant amount of capital from 2007 to 2008, they steadily increased their total assets even until 2011, when their current assets went down from 2010 to 2011. That means that their property, plant, and equipment assets went up. Clearly, they made differentiating investments and diversified their investments to increase their total assets, which would make this company a buy. Now, if you go back to this and you look at the charts, you can see now that this company is, let's go to the overview. This company is no longer a buy. Looking at the 1 day, it's going to go down. It might have bottomed here, but it's going to go down. The 5 day, it's basically a stagnant stock at this point. But if you look at the 6 month, there was potential in this. And I gained a slightly profitable amount of income from the stock itself. So I'm not telling you to buy it. I'm not a CFA or I'm not a registered broker. But that will conclude our balance sheet analyzation of Amcor Technologies. This has been a Hamilton Financial's T. Casciola Corporation publication. Thank you.